Hi friends, welcome back. So I want to give you an update on the financial markets and what's going on in our community. So this is coming from a comment, Fat Men Drive Trucks, just 14 hours ago, and I guess this is the fat men there. And this person says, crypto rules next year will be at 100K, and we're referring to Bitcoin. Every influencer on this platform will make videos, even the haters. And another member of the community, this is from Jose Luis, says, why will it be 100K? Again, referring to Bitcoin. Oh, yeah, because gamble's gonna gamble. OS 10 version .311 says, what makes crypto buck worth even $1? Only way to spend it is on the darknet markets. For that, it's great, much safer than buying from strangers. And then Fat Man with Truck says here, what's your email? Want to compare returns? History often repeats. History often repeats all investing is gambling. And essentially what the Fat Man does, and there's a long conversation, you want to read the thread, you can, but he goes on to brag how much money he's going to be making from Bitcoin, how awesome Bitcoin is, and wants to email his statements to everyone. And I laugh at this kind of stuff because, guys, hey, if you made tons of money on Bitcoin and crypto, fantastic. Go out, enjoy your life, buy as many cars and yachts as you can. Travel, do all sorts of crazy things. I'm not sure why you're spending so much time telling people how rich you are, but you do you. I mean, joke, of course. Anyway, regarding the markets, though, I think we may get a lot of these sort of, what's the right word to say, heated conversations on social media, as we may see, what worked in the past may not necessarily work again in the future, because the person that was going on is like, what does he say? History often repeats. All investing is gambling. I don't know if I would necessarily say all investing is gambling. I'll say regarding investing, right? You're betting on what could possibly happen in the future, and I'll just say some bets are riskier than others. Like for example, if you look at the market here, you can see some of the stuff is red, some of the stuff is green. It looks clear to me like you're seeing a bit of rotation. People are taking profits in tech and going into other things. You can just see it right here on the chart. And one way is to play the markets. You don't have to be stressing out all the time. Is this get index fund, S&P 500 kind of stuff. So regardless of what's going up, what's going down, you got a total thing and you got the mix in there already. You're diversified, and you'll perform as well as the market. And then if you want to take extra, bets or gambles, however you want to say it, or extra investments. That's probably a better way to say it, but you can do whatever you like, right? Point being, though, is that some people are more aggressive than others, and what worked in the past may not necessarily work again in the future. So like I said, looks like there's a rotation, and moreover, you can actually see it on this chart as well. So the micro and small caps were doing well up in this one day. 3.85, small cap up 3.49, right? You can see it. NASDAQ down 0.12. You guys can see the numbers, like there's a rotation. And timing it is tough, right? If you try to get the exact, okay, this is exactly when I should sell my tech and exactly when I go in something else. And it's hard to play that game. So that's, again, sort of why you may want to go S&P 500, get the whole market there, and you're going to be fine. And then if you want to weight heavier on different sectors, you can do that. As you can see here, it looks like industrials and basic materials were the big winners today. Tech was down a bit. Comm service was lagging. It was still up, though, in energy, right? You guys can see it. So we track this stuff all the time, and it's actually fun to look at the markets and see what's up. If you want to do it a different way, you can go equal weight value, high dividends, right? You guys can see it. And again, growth is the laggard, which represents stuff in tech. The big winner, though, however, actually, just to be honest, the last week has been crypto. So Fat Man Who Drives Truck is correct. Crypto has been going up. Will it hit 100,000 by next year? Who knows? Maybe the fat man will sing. Maybe, and maybe we'll all be sad that we didn't get into crypto. And that's for each and every person to decide. I've said it several times on the channel. I'm just not into this stuff. And it's interesting because sometimes people write comments or even send me messages and say, hey, you have to look at all of these reports and all these white papers, and you have to look at what this other YouTuber said about Bitcoin, and why you should throw all your money into crypto, etc. Guys, I understand the arguments for Bitcoin. I'm just not into it. It depends. For some people, they think, okay, all fiat currency is worthless, your dollar is worthless, etc. I mean, I'm happy with dollars. I'm I'm happy with dollars. I give you an example. Dollar's been really strong lately. I compare this to the Korean won. You can track it if you want to compare it to the Japanese yen or the Chinese yuan, or you want to track it to the British pound or the EU, the euro, whatever. Dollar's been doing pretty good. The reason why I mentioned the won here, because I'm here in Korea. When I first came to Korea, it was like around this time when the dollar was really, really strong. And that was like right after the financial crisis. And here we came to Korea around this point here. I mentioned it several times on the channel. And dollar continues to be strong. Usually from dollar to won, like if this hits 1400, that's like crazy good. Like 1200, 1300 is good. 1400 is crazy good. If it goes like to 1500, 1600, then you're going to like nuts level. I can't predict the currency that far ahead in advance. I mean, as you can see here in the past, it never really reached 1600. I mean, you can see in the chart here. So I probably not, but you never know in this world. Part of this strength of the dollar is also going to relate to other things we're seeing around the world. And particularly there's a report from the IMF that says, hey, inflation may be sticking around. And, you want to watch this stuff because these days, multiple companies are, involved in business overseas, right? Apple sells iPhones in China. There's just a report that Apple is selling more iPhones now in India, is going to try to capture some of that growth. And right now in say India, for example, with the Apple situation, Android controls the market. I think they have like it's on my Android here, maybe 96, 97% of the market, like something like that, like mid 90s, and then Apple's only got like 3% of the market. But it depends on how you look at it. Does that mean that then Apple has lots of opportunity, or is the opportunity gone? Apple's investing heavily, so they think there's gonna be opportunity there. And probably what they'll do is they'll be selling the iPhone SEs, which is the lower cost one. I mentioned this stuff though because, like with the IMF though, they were saying, if there ends up being trade wars, which is sort of what they're talking about, if Trump comes into power and he's all about tariffs, Biden's right there too as well. So I don't, either president that is, it's just politically, if you go out on the campaign trail and say, I'm going to fight China and we're going to, force those Chinese people to compete on a fair market, etc. like that. That's sort of the talk. It certainly could create that trade wars between the two countries. We've already had these kind of things to where we're talking about limiting AI chips, selling over to there. So that affects companies like NVIDIA, et cetera. I mentioned before, though, NVIDIA finds ways to sell it to third party, then the third party can sell it to Chinese customers that want said thing. But the other thing, too, the IMF is talking about, and we'll go through some details of it, is you want to also look at like services, which are hard to bring down in cost because, once you start paying people a certain amount of money, you don't really lower their wages, right? So then the bet right now is really interesting. The IMF is saying inflation is going to be sticking around worldwide. The bet in the U.S. markets is like, the Fed is going to cut 100% a chance at September. So, we'll see. If they do, I don't think it'd be a big cut, probably be like 0.25%, right? So 25 basis points, and we'll see. We're in July right now as I'm recording this. My point of view is just hold pat the rest of the year, maybe start cutting next year. Powell went on the road show lately, has been saying, hey, we don't even need the numbers to come down to 2%. As long as we see it going, that direction. Before I was, because he kept saying higher for longer in terms of interest rates, before I was thinking, maybe we'll see 2% inflation for, a couple of months and then they'll do it. Because that's how they're talking. But that's the rhetoric right now is we need to see it trending in that direction, et cetera. And I think the pressure has been building up on Wall Street, politically, et cetera, to cut rates. How many cuts? I mean, maybe one or two this year. I say, who knows what they're going to do, but I'm just saying the sort of market's betting on. Again, my opinion is no cuts would be great. The market before, though, last year, remember, was saying like, it's going to be 6 cuts. It's going to be awesome. But Wall Street's always looking for some sort of narrative to, something to talk about. but I will show you some more details. They are under pressure, and they do want more interest rates to be lower. So what does the IMF say? This says here, the IMF's chief economist has warned the progress on bringing inflation under control could still stall on the back of stubbornly high service prices that we talked about, and scuppering hopes of early rate cuts. And then it says here, World Outlook officials should be ready for more bumps in the road as they wrestle to get inflation back to the 2%. And then it says here, he added that service price pressures were proving persistent on both sides of the Atlantic, meaning that it's happening in Europe, happening in USA, despite recent progress for lowering inflation. And they also mentioned trade, right? IMF also warned the escalation of trade tensions could further raise near-term risks to inflation by increasing the cost of imported goods along the supply chain. We're also looking at here, mentioned that, Trump and Vance, they're also about, China, etc. I'm just showing you guys, I'm summarizing it for you and also showing you where this stuff's coming from. These are the projections here for growth. So we're looking at slightly slower growth. So maybe, this again from the IMF, maybe in the USA you're looking at 1.9% in 2025. So it's interesting because you compare that to the numbers that we just got from China. I think the projections were 5.3. They came in at 4.7, which is lower than expected. And I mentioned that before. Moreover, in China, they're concerned about their own economy. They're having a meltdown with the real estate. Can we get people spending, etc. The banks have been reporting earnings, and hey, banks are still making money. This is the big ones, that is. But there's some caveats to this. So we're talking about J.P. Morgan, Bank of America, Citibank, Goldman, and Morgan Stanley. And what's interesting is that they mention consumers, they mention interest rates, and they also talk about trading. So one of the things that they want people to do is keep investing in the markets, and obviously the more you invest in the markets, the more the markets go up. meaning that the more people you convince to stay, to keep your money in, right? It's just the more clients you have, the more money you convince them to throw in, the more it goes up. It's not hard to figure out. It's kind of like Kathy Wood. She had a funny quote. It was like 3 or 4 months ago. She said something like, "Hey, if everyone just put 5% of their portfolio into Bitcoin would be like $1 million." It's like, oh my God, you're so brilliant. Like, you guys understand what this thing is she's saying? Basically, if everyone buys it, it'll go up. So of course. And then Wall Street, why would they, always want you to stay invested like that? Because they make money from management fees. Also, too, there's hopes that there'll be a revival. That's the right word. A revival of mergers and acquisitions. So they're hoping for that. But talking about consumers, this is stuff I want to go over. Let's just read what this is coming from the Wall Street Journal. It says here, talking about from the banks. Executives said the economy continued to look strong with consumers and businesses, both spending and borrowing, right? So you need people to spend money. U.S. is a consumer economy. You also need people to borrow money to keep spending. Moreover, you need people to borrow to buy houses, etc. So this is what we're talking about. Revenue from wealth management also increased, right? So they're making money from managing your money. Credit card income and transaction volumes jumped, right? So people are still doing that. Aggregate spending on debit and credit cards at JP Morgan, the biggest issue of the group, rose 9%, and credit card loans or outstanding balances rose 15%. So just take time to digest these numbers here, right? So they're saying, okay, people are spending more, and their balances are also going up 15% higher. And I think this is what it is, right? It's like, how long can this go? Yes, if people are spending money, it keeps the economy going, right? You get that. People are still buying your iPhones, still buying your Teslas or whatever. Keeps the economy going. But like, if your balances also keep going up, and if interest rates remain elevated, like, can consumers keep up with the payments? That's the question. Because what happens if they can't? What happens to the system? We just talked about yesterday. There's an increase in evictions, and then they mentioned the Sun Belt. That's a region of the USA, and I was like, okay. And we saw housing prices were cooling in some areas. We talked about this, right? So this is the stuff that this is sort of why you take all these factors into consideration when you're tracking the consumer. Yes, they're spending, but yes, their credit card balances are going up. Also says here, consumers across the board appear to be benefiting from higher paychecks. Oh, they're getting paid more. Great. And this also relates back to what the IMF said. It's hard to bring down inflation because you have services costs. When you pay people more money, right? The companies often, or businesses often pass the costs on to you. I got to pay my workers this, and I need to charge you this to, make profit. That's what we're talking about here. So yeah, people are spending more, people are making more, but their balances are also going up. Research from Bank of America shows that wages grew in March for high income and low income households at the fastest rate since 2023, reflection of the economy's strong labor market. Right, but here's the key, though, is, and it's not necessarily mentioned here, and this depends on your neck of the woods and where you are in your position, but is your income growing? Yes, but is it growing at the same rate that, say, your housing costs are growing, or growing at the same rate let's say your food costs are going, your energy costs, et cetera, right? And that's gonna be different for everyone. But this is part of inflation. Moreover, we'll talk about as well, the economy remains resilient, and a lot has to do with the consumer, right? So we always talk about the consumer, but there are some areas of concern. JP Morgan Chief Executive Jamie Dimon said on a call with reporters Friday that there were signs of de-stress in the bank's loans to consumers with low credit scores. So, gee, I wonder why that's happening. So, I may joke. The point is with this, and we talk about this, is that prices are going up, okay, on all sorts of things. And again, are you getting paid enough to keep up with it? We've seen that the lower third of Americans are really, really struggling. Their wages clearly haven't kept up enough. Rents are high, mortgages are high, et cetera. We see reports of, unfortunately, what should I to say it? Young people have to move back in with their families because they just can't afford to live on their own. It's too expensive, right? And so many people struggle with that. We see, and this is unfortunately in the USA, we see increased drug use. It was the fentanyl thing. Actually, fentanyl has actually been coming to Korea. There's been reports of that as well. So, when I say this with seriousness, I don't want to make jokes about this kind of stuff, but the point being is like, for some people say on Wall Street, they're like, oh, well, high income households are doing awesome. We're doing fantastic. And they'll say, oh, see, look at the numbers. Low income households are making more money too. But like, you also always want to talk about, which they don't mention here, but you want to talk about what's your real wages, right? Is your income keeping up with your costs that you have to bear every month? And so, when you talk about this kind of stuff, and I always talk about money with you guys, keep your spending in check, right? Just because you have more money doesn't necessarily mean that you should spend more money. What happens, like, think of it this way, what if you change your thinking of like, hey, I'm getting paid more now, and I'm gonna figure out ways to save more now. I'm gonna figure out ways to invest more now. Don't think you have to spend all of your money all of the time. Good times may not necessarily last. It's hard to predict what's going on in the future. And then it goes back to, say, the market thing. Yes, maybe this, fat man that drives trucks, maybe he did really well, the past 3 or 4 months with crypto, right? But who knows what's going to happen in 3 months from now, right? And so this is sort of why it's a basic lesson, but it's important to always reiterate, don't throw all your eggs in one basket. Sure, maybe it worked before, but may not necessarily work again. This person keeps saying history often repeats. Oh, okay. Maybe in your experience of, 3 years of investing or however long you've been doing it. But, guys, things go in cycles, and sometimes, the things that worked for you before may not necessarily work for you again. So love to hear your thoughts on any one of these things. It's always fun to talk with you guys about this stuff. That's what's happening in the markets, and catch you all in the next video.